Good afternoon, everyone, and welcome to the Transform Lexington Market Technical Support Workshop for Business Finance. My name is Pickett Slater Harrington. I serve as the Community Engagement Lead for Seawall. Seawall is a Baltimore-based developer that believes in reimagining real estate so it launches powerful ideas and connects communities. Seawall was selected to facilitate the transformation of Lexington Market. I'm joined today by one of our partners, Jennifer Clark from Baltimore Core. Jennifer, if you could wave. They have been an instrumental partner in helping create an equitable application process and providing support. I'm very happy to introduce two very special people who are here with us tonight to help you think about business finance. The first is Lindsay Peel with BB&T, now known as Truist, I believe. I got that right. And we also have Shemaine Davis as well. So I'll let them both introduce yourselves. And I think, Lindsay, you're going to kick it off for us. So, ladies, I'll turn it over to you at this time.
Thank you so much, Pickett, for that awesome introduction. It is truly a pleasure to be here with each of you. Definitely a congratulations in advance just for taking this next step in your professional career and growing your business. So again, my name is Lindsay Peel. I have the awesome honor to serve as a cluster branch leader for BB&T, now Truist. I manage two of our retail locations right here in Baltimore City, one in Harbor East and the other right here on the Inner Harbor within the Gallery Mall. In addition to my management role, I also serve as our business development officer. So I spend a lot of my time working with small business owners with revenues up to $2 million and total credit exposure up to $250,000. My passion really and truly for small business comes from my parents. I grew up on the back of a small business. Without their business, I promise I would not be here. So I'm very grateful to have the opportunity to pour back into my community and to make sure that business owners like yourself has access to the resources and tools that are truly out there to build sustainable businesses. So, of course, as a business banker, I am one of your key partners within your Bell team. And today you'll actually have half of your Bell team present to you, your business banker, as well as my accountant partner, Shemaine Davis. We are super excited, and I know that you all have been waiting, so I'm not going to be before you too long. So in a few seconds, you're going to see my screen pop up, and I'm going to share this presentation. So a part of what I do with my clients is we typically go through what we call financial insights. And this financial insight allows me as your business banker to get to know you, know your business, as well as understand your personal financial story so that we can figure out together whether or not there are some changes that we need to make in order to grow your business to the level in which you want to see it grow within different stages of that business. Within this insight, you will learn the 5 key areas in which we specifically assist our business owners, which will ultimately help you to take your business to the next level. I am really huge on building generational wealth. And a part of that is really creating solid foundations within your business so that you can continue to grow your business without any loopholes or cracks or leaving gray area or opportunity really for your business to fail. We do not want that. So as your partner, as your business banker, it is my job to make sure that you have internal banking connections as well as external partnerships so that you can grow your business. As a business owner, I know a lot of times you feel like you have to do everything on your own, you have to know everything, but that's not the case when you have a team such as myself. So when we look at BAIL, the acronym BAIL, just in case you've never heard of that, so that is your business banker, your accountant, your insurance agent, and your lawyer. These are 4 key people that you absolutely need when starting and growing your business. We are those 4 special people that have different specialties that you may or may not always have a lot of knowledge about, which is okay. It's not about you knowing everything. It's just about you being able to connect the right people and create a team of people who can help you move and further your mission. So within this financial insight, our first couple of pages will really take us into the how. So the first step is to inquire. I learn about you and your business. How are you currently operating? What are some of your short-term and some of your long-term goals? What are some of the challenges that your business face, so that we can also create a plan together at the end to defeat some of those challenges. So the next step in this process is to discover within 5 key areas in which, as a business owner, you absolutely need to consider. So the first is managing your cash flow. We always want to know how our money is coming in and how our money is going out. The second is leveraging credit. Are you utilizing a lot of your personal credit that is potentially impacting your debt to income ratio? Or are you taking advantage of business credit that don't report to your personal credit in order to grow your business? Are you managing risk? What type of insurance products do you have? Are you ultimately protecting your assets? Also, providing employee benefits. Your employees are always going to be your biggest asset. Yes, 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 we absolutely need you within your business. However, you need your team within your business. So a part of having that team and a part of creating loyalty with that group of people is making sure that you are able to provide them some form of benefit. And the last, however, but the most important, is your personal financial needs. As a business owner, it is very easy for you to forget about your personal finances because you're so busy working on your business. However, you have to make sure that your personal house is in order before you really step out there and engage in a lot of activities when it comes to your business. Because if you don't necessarily have your personal financials intact, then your business may suffer from some of that. And the last area is we solve. We create suggestions and ideas together, and that allows us to create a roadmap, short-term and long-term. Usually within a year, I like to suggest to my business clients that you need to consult with your business banker at least once a quarter, just as you should your accountant, to make sure that you are following and achieving those goals. That way, if you find one issue from one quarter to the next, you're able to pivot within the year versus examining things, elements of your business at the end of the year, and then you have to wait to implement those new things. The next couple of pages, in which I will not necessarily read every single word, but it takes you into a national industry overview. It provides an executive summary. You're able to see the financial trends within your industry up to 5 years prior to 2020, as well as an overview for the outlook of 5 years after now. On this next page, you're also introduced to a few key external drivers. Now, as you can see, this particular presentation is set up for fast food vendors, right? And there are some things, if you're not necessarily a fast food vendor, but you might be able to relate with, and there are some things that you may not be able to relate with. However, if we're able to connect outside of this session, I can create a more personalized insight for you that is specific to your business. Now, within the executive summary, it introduces you to a lot of high-level information when it comes to your particular industry right here in the US. It talks about annual growth. It talks about different trends that you might see. And one of them in which I've highlighted red because I thought that was very, very important, where it says eating habits have changed as people have become increasingly health conscious. They're demanding alternatives to a number of their traditional fast food options. So in any business, you want to always make sure that you've done your industry research. What is happening around you? What are some things that you might need to do to pivot in order to make sure that you're keeping up with your competition? So with this industry level executive summary, this is also something that you can incorporate within your business plan, in which I really do hope that everybody has, because your business plan is really your blueprint to how are you going to grow your business. And if you don't, it's not too late. So this particular slide will take you into national revenue growth. So we're able to see that in 2020, the fast food industry is at least a $276 billion industry. There is plenty of room for growth, as well as plenty of money out there for all of us to take advantage of. The next couple of slides also takes you into national product, service, and market segmentation. At the top, you'll see different types of food and the way that they are split within the industry, from sandwiches to chicken, pizza, pasta, Mexican food, burgers, etc. And then below, you're also able to see your major market segmentation and the percentages that accompany that information. One thing that I do like to really acknowledge is, what are some key success factors within your business? What are those areas that will allow you to be more efficient? What are those areas that will allow you to potentially make more money? Understanding key success factors allows you to also add a little flavor to what you're already doing to really set you apart from everyone else within your industry. Now, a part of that, while we're always excited to learn what can we do to make us better, we also have to understand, well, what are those threats and opportunities that we can see that can potentially negatively impact our business? And these elements are a part of that SWOT analysis, understanding your strengths, your weaknesses, your opportunities, and your threats. When it comes to creating that SWOT analysis, you really want that to be a part of your business plan as well, not just for yourself, but also when you're having potential conversations with future investors and even talking to business bankers when you're ready to start accessing capital. Now, this is where it gets fun for you and I. This is where we really start to engage in conversation. I get to understand the ins, the outs, the good, the bad. I understand that in business, everything is not going to be perfect, and I am your safe space. When it comes to business banking, you absolutely want to have a relationship, and a strategic relationship with your institution. A relationship with your bank isn't just having a checking account and you make deposits, you make withdrawals, you might have a credit card, and that's it. That's more of a transactionship per se. A relationship, of course, is mutual. You as the client, as well as myself as the banker, we are both intentional about learning each other, understanding who we are, as well as what it is that you have, the vision that you have for your business. Because I am your advocate. Your business banker should be able to advocate for you on your behalf in any situation. When it comes to speaking with underwriters about interest rates and attempting to get a certain amount of capital for you, when it comes to talking to even your external partners that we have the opportunity to make introductions to, you want to be able to have that very good and transparent relationship with your business banker, because I need to know what's really happening so that I can help you on this side. I know a lot of times, a lot of us might have grown up and not trust banks, or might not have had the best experiences for themselves. However, we also have to move past that and really look forward to creating that relationship. And even if your financial institution right now is not providing you with everything you feel like you deserve to receive from them, hey, ask a friend who you know that's doing well in business and love their business banking relationship. Ask them, who do they bank with? Ask them who their relationship manager is. And ask them, what are some things that you should look for when it comes to building a strategic relationship with your business banker? A lot of us don't really know what to look for. We know how to come in, provide documents, open the account, maybe ask and answer a couple of questions, and that's it. However, when you have people like myself who are very, very intentional about building solid foundations and growing strategically, I want to know more about you. That way that we build a level of trust, because there's going to be a time where you potentially need me to do something for you or fight on your behalf. And if that mutual relationship isn't really there, and I can't really say that I know you and understand what you and your business does, it's going to be very hard for me to potentially meet that request. And a very familiar request, I'm sure to some, is removing holds off of checks. You know, often we might deposit a large check, we might meet a new vendor, or, you know, we might have a new gig and we're depositing that large check. And sometimes you need those funds readily available, sometimes like tomorrow, in order to fulfill the request. However, depending on the relationship that you have with the institution, as well as just depending on the financials and how you've managed your cash flow with that account, they might put a hold on it. Your business banker, if we have that solid relationship, I trust you, I understand how you operate in business, I also understand where you're going, I'm going to more than likely remove that hold for you because we are here. We have that relationship. However, for those clients who might just pick up the phone and call a branch and don't really have a relationship and ask for something of that nature, the likelihood of us actually doing it is not so good, just to be honest. So you want to be able to have a relationship with your business banker. It can only help you more than it hurts you. I promise. I know we haven't always had the best reputation with working for large financial institutions. However, you need us just like we need you. We need you as a client so that we can also, one, continue to do the work that we want to do in the community. If we don't have any clients, we can't do the work that we need to do. So a part of these next couple of slides is really your business banker being able to understand your business. What are some of the challenges you face? What are the goals in your business? What is your 1 to 5 and 10-year plan? And what are some of the things that you need to make those things happen for you? On this next page, it breaks down those 5 key elements that we mentioned earlier in which we assist you in your business. Managing that cash flow, you leveraging your credit, making sure that we're managing risk through insurance, making sure that we're taking care of your employees through employee benefits, and taking care of your personal financial needs. And even deeper than that, it shows you a list of the products and services that you could potentially take advantage of within your financial institution. A lot of times as large banks, we have literally everything that you need in-house. I know sometimes we might have a bank account over here, we might have merchant with Square, or we might have insurance with Hartford or anyone else. We might have our personal things elsewhere. However, when it comes to building strong strategic relationships, your bank appreciates clients who take advantage of the services that we have to offer. They're ultimately for you. I know that sometimes you might not know what your bank offers. However, when that information is presented to you, be open. Don't think that they're just trying to sell you something just to sell it. No, we're presenting a service that could be beneficial for you. A great example, especially when it comes to merchant services. A lot of businesses nowadays, we have merchant processing where we can accept payments from clients via credit card or debit card. However, a lot of times clients don't always take advantage of the merchant within their institution, which means that now you're dealing with a third party. And let's just say, for example, there's an issue with your merchant processing. You can't really call me to help with that particular situation because when I'm calling your merchant processor, I'm technically a third party to them. So they're not going to release certain information to me and they may not be helpful. Versus if you have your merchant services with your institution, if something's going on with your account, your merchant, or anything else, you're calling the same person who can assist you. Yes, there are different departments a lot of times within your institution that might have a separate customer service number. However, you can still reach out to me, who can also reach out to those partners to make sure that you're getting the service that you need and ultimately that you deserve. Within the next couple of slides, it'll break down a few questions that we typically like to ask our clients to understand how you're currently operating within those phases and elements of your business. So a part of managing your cash flow, who are your customers and how do they pay you? Are they paying cash, checks, debit cards, credit cards, wire, or even ACH payments? How do you even pay your bills? Are you taking advantage of bill pay, or do we use your debit card or credit card? You know, how do you manage your money day to day? Do you use online banking, or do we run into the bank every day? What is your current process? And the purpose for these questions is to understand, one, how you're currently operating, but two, to also listen to cues to figure out what solutions do we have here that we can extend to you to enable you to grow your business, but also to enable you to grow that strategic relationship with your bank. You want to have that relationship with your bank and your banker, especially because your bank ultimately is going to be your biggest investor. When it comes to accessing credit and getting business credit cards, lines of credit, loans, especially when they're unsecured, we're giving you, extending you this money to grow your business, which is similar to an investor. Investors, yes, they want to know about you and your business before they're able to extend you money. You want to look at your bank as your partner, as your first investor. And a part of really creating strategic relationships is taking advantage of what it is that we really do and truly have to offer you, especially because it counts a lot of times when we're looking and reviewing applications. I'll give you two great scenarios. Client A, let's just say client A might not have the best credit. However, client A has their business checking and savings account with us. They have their merchant. They might have a business credit card. And let's just throw in there that they even have a personal account. And let's look at client B. Client B might have the exact same credit. However, they might only have a checking account with us. If we're looking and negotiating and having conversations with these underwriters, and let's just say neither one of you really have the credit to get you what you need, however, they're looking at your entire relationship with the institution, client A might just get that approval simply because of the overall relationship versus client B, who doesn't really have a strong strategic relationship, just one bank account. So you even want to think about scenarios like that. Think about when you're going to need your institution to be there and to do something for you. And you want to think about, well, what do I present to my institution? What type of client am I? Am I a client who consistently overdrafts my account, always want fees back, might have bounce checks here or there? Or am I a client who's building strategic relationships? I have multiple products and services with my bank, and I take care of my account. This next page taps into employee benefits and, of course, your personal financial needs. Now, when it comes to employee benefits, I understand that as small businesses, a lot of times we simply just can't afford it, and that's okay. However, one benefit that I really like to stress to our business owners, especially in the middle of a pandemic, is taking advantage of your institution's financial wellness program. Most banks have a segment called At Work, where we bring the financial wellness to you at your place of business for your employees. Of course, now we're living in the virtual world, so yes, we are doing a lot of virtual presentations. However, you still want to be able to offer this benefit to your employees because one, it's at no cost to you, and then two, your employee feels like their employer values them enough to contribute to their personal financial journey. To me, I would feel a sense of loyalty if my employer brought it to my attention that they would like to offer you banking services and financial education to me as their employee. I would appreciate that. And when it comes to being a small business owner, you want as much employee loyalty as possible because your employees help you make money and they help you grow your business. They also reduce a revolving door within the business so that you're not wasting a lot of money, time, and resources on training new people consistently. You can build that loyalty with the solid team and you can keep them there. I promise you, you will grow your business at a much more faster rate and a little bit more strategically than a lot of your neighbors. Tapping into your personal financial needs. Think about your personal financial picture. You know, I like to have all of my business clients to typically complete what we call a personal financial statement. Your personal financial statement allows me to see all of your assets as well as all of your liabilities. And where we're looking at your assets and liabilities, of course, we do see your net worth, but most importantly, we see what it is that you currently have within your financial world. And we also are able to goal set for for you personally with what you're doing in your business. Your business finances and your personal finances, they tie in together more than you possibly can even imagine, especially when it comes to accessing capital. And I say access to capital a lot because as a small business owner, that's something that we're consistently always looking for. How can I get funding for my business? How can I get a loan? How can I get a line of credit? And a part of being able to qualify for those things is also having a solid personal financial picture. You cannot neglect your personal finances when you're growing and developing your business. This last page, well, not last, but this next page gives us room to create a roadmap together. We're able to identify our immediate, short-term, and long-term goals within your business so that we can identify next steps on your behalf as well as mine. Next steps could be an immediate goal of me connecting you with my accounting partner so that we can make sure that your books are right, as well as making sure that your accountant and your business banker can have a relationship. We need to know what your goals are in your business together, because sometimes the work that we do can complement each other really well, or they cannot. And my favorite thing to mention when it comes to having a solid business banking relationship and an accountant relationship that works together is tax season. Of course, your favorite accountant is going to make sure that they reduce your tax liability so you're not paying the government all of your income. However, when you're looking to acquire business funding and that access to capital for your bank, we're usually reviewing your last 2 years' tax returns. So if for the last 2 years you've taken major losses to reduce your tax liability, to us, we're looking at what's on paper. Yes, we can document what the client says, stated income. However, when it comes to a traditional underwrite, they're going to ask for those tax returns. And if your tax returns are saying that you took a major loss, especially in situations where you probably didn't, you just needed that so that you can get a refund check, or to eliminate paying a lot of taxes, you might not be able to fulfill your request. Even right now, I'm working through and fighting for one of my clients who currently still works a 9 to 5, still makes great money. The business does okay. However, the loss negated all of the business income, and it even broke into that salary job that would typically help on a business application. The loss just kind of made it worse. So now we're struggling trying to get what the client needs simply because of their tax returns. And a lot of times it's because your accountant and your business banker don't have conversations. They don't both know what your goals are. Sometimes your accountant know one goal, your banker know another goal. They need to coincide. That relationship is important for you to grow your business. This next page, which is also one of my favorite because it introduces you to your business banker. It gives you a brief bio of who I am, why I do the work that I do, as well as what I've done before. That way you can build a sense of trust in me to understand that, yes, I know what I'm talking about. On the right side of that, we have my dream team. Of course, when it comes to business banking and banking in general, there are multiple parts to running a bank. There are multiple pieces to creating a strong financial portfolio. And a lot of times you need different people because we have different specialties. So on this right side, you see some of my partners, my payroll partner, my financial wellness partner, my wealth partner, to make sure that you can get that white glove service from your institution that we all typically desire. And if you don't, it's more so because you haven't seen it. You don't know that it's out there, but it is. On this next page, of course, it just brings you into general information about who we are as a company and what it is that we're ultimately looking to do for you as a potential client. Now, ultimately, I'm not here to say, hey, forget your institution, come and bank with me. What I'm here to tell you is that if you do have an institution that you do currently bank with, I need you to do your part as the client to create that relationship. Go in and talk to that banker. Figure out who it is that assists the small business community and have a conversation. Let them know what your goals are. Let them know what you need and desire from an institution so that we can genuinely help you. I know sometimes that it's a pain having to walk into a bank, having to potentially ask somebody, a few questions, and or having them ask you a few questions and then asking you to have a seat. I know that you're too busy. I know that you have a business to run. However, you have to separate working on your business and working in your business. Taking care of your business financials, that is an element of working on your business. Because if you don't take care of your business financials now, you might not have a business to even think about financials for in the long run. We want to help you create sustainable businesses. We want to help you create a business that will be here tomorrow, that will be here 5 years from now, that will be here 20 years from now, and not just solely benefit you, but that can benefit your family, your grandchildren, your great-grandchildren, as well as the community around you. Our community needs small business owners, and small business owners need a strategic financial team who can help you reach the goals that you need to reach to grow your business. I hope that this presentation provided a little bit of insight and some information for you that you can take and use with you tomorrow. You don't have to wait to apply this information. Even if you're a little nervous and you just don't think you're ready, just call me. We can talk through it. Even if you feel like you want to stay at your current institution, I'm okay with that. Just use me as a trusted advisor to be able to jot ideas through with. So let's talk about, let's goal set together, and let me help prepare you for that conversation with whomever your business banker is. Again, my name is Lindsay, and I'm very excited to answer some of your questions.
Thank you so much, Lindsay, for that wonderful presentation. If you have questions, we want to encourage our participants to drop it in the chat box or use the Q&A feature on the platform to answer any questions. While questions are coming in, Lindsay, we don't see any right now. I know folks are still introducing themselves, but if we have questions, we'll make sure we circle back to it. Charmaine, if you want to introduce yourself as well, and then kind of move towards your presentation.
Sure. Good evening, everyone. I am Charmaine Davis. I'm a CPA, and I work with a local accounting firm, Abrams, Boston, Williams. We're located in the village of Cross Keys. And there I oversee tax and audit, the fun stuff. So what I'm going to do is talk to you a little bit about what's needed. So Lindsay did a great job in showing the picture. We're going to help create the picture, okay? And let's see. All right. So I like to use my presentation from the SBA and FDIC. I don't believe in reinventing the wheel, but what I like to do is provide clarity to it. I specialize in small businesses. And with that is I go to the mom and pop where we're paying everybody cash and under the table because this is the way we have to do it. And I help them say, okay, let's come up with our goals and where we're trying to go. And some people are okay with staying at the mom and pop and saying, you know what, I don't want to deal with the banks. But for those that are saying, look, I need to expand, I'm looking to grow, and I need direction on how to get there, that's what I hope this presentation provides some clarity in that. So we want to kind of skip through a lot of the formalities, but this is just a brief overview. We're going to hit on the budgeting, the bookkeeping, and the financial statements. So Lindsay talked about the financing basics. She kind of touched on what is she looking for. The main thing is profit, and she wants to look at your liquidity and what is your business worth? What are you worth? What is your credit? So what I want to do is I want to help you understand, just give you a brief overview that you understand your profitability. So that could be current profitability and or future. Where you're looking towards the future, Lindsay mentioned about 5 to 10 year growth. So let's forecast. What are we going to look like? What do we look like today? And what are we going to look like 10 years from now? And how do we diversify? How do we add new product lines? How do we expand our market? And we're preparing for financing and loans. So generally, the main times, two types of people that comes to me is usually to do taxes or when they're trying to apply for a loan. And it would be beautiful if I could say that I've had relationships with them all throughout the year, and it was so easy to put the package together. But of course, you know, accountants, we don't have the best reputation, and usually it's some type of anxiety and stress in trying to get it together. So they usually come to us a week before everything is due and say, okay, can you work a miracle? And I have a whole box full of receipts and we're trying to work through. So I'm not gonna paint a picture that, oh, I can make a miracle out of that box. This is your baby. This business is something that you gave birth to. I cannot tell you what your business is without you. So this is it's going to be a joint effort. This is a partnership that we're going through, because there are going to be things in the box that doesn't tell your story. So sure, I may say, wow, you spent a lot of money in XYZ, but only you can give me that backstory. Oh, you know what happened? We had a pipe that burst and we had to spend all this extra money and with a plumber, and then our water bills were extra, those type of situations. So it goes back to what Lindsay said, it's that relationship. And sometimes we have to fast forward that relationship in that meeting, but that's when you tell me everything about it. So then I can present that picture to say, okay, now I see why this person is not overspending. They just had an extenuating circumstance this year. It's not that they're poor at cash management. They just did what they had to do for the time. Or maybe they chose during this COVID. I know a lot of the small businesses were really struggling with, do I lay off employees? And these employees have been stuck with me for XY years, and I know they don't, this is their only source of income. And maybe you may have overextended your business by supporting your employees because you've created that family supportive environment. That's a story worth telling, and that comes out of the relationship. So let's start with our budgeting tool. So with the budgeting, before we can get in the mix of how much money you're making, before you collect $1, we got to create a budget. And I know I have clients that say, well, I don't know. It depends on, we're not saying it's going to be exact, but if you don't have a roadmap on where you're trying to achieve or where you're trying to go, how are you going to know how to get there? So even if it's a mindset, so for instance, that if Lindsay, I'm a piggyback on her fast food analogy. If you know you're putting a fast food facility right near college, and if you look at the competing fast food restaurants in that area, and you say, okay, well, they generally produce around XYZ $500 per day in revenue. Then you know to say, okay, well, you know what? If I'm in that area and I have the same caliber, I'm anticipating about $500. So that's where we begin our budget. Okay, so to generate $500 in revenue each day, how many people do I need to employ? How many hours do I need to stay open? How much inventory, how much product do I need to have on hand? So this is where I, as an accountant, get to know you intimately. I pick everything out of your brain. So most of my business owners, they already have their budget. They already know it. They just haven't written it down. So I try to pull everything out of your mind, pull everything about your baby, your industry, your business, and say, okay, we're gonna create this roadmap. And so this is where I was talking about, where we review each category, tracking our monthly expenses. I went the wrong way. So with the budgeting, we created our roadmap where we're going. Now your day-to-day expenses, you have income coming in, you have expenses going out. We have the aspect of accounting is your bookkeeper. This could be someone that has been trained, that you may already have the organization skills, and you're using some type of, you can outsource it. It can be you can be creative in this area. However, it's a critical part of of your business. This allows you to capture all your transactions that you're creating in an organized manner. Because sometimes when businesses come to me, they almost have a running tape of everything in their mind, but they just haven't been pulled together. And it's giving you a snapshot each day of what's your business, how much money you're making, how much taxes you anticipate paying at the end of the year. So say for instance, and this is, Lynn says it's a broken record. Most clients come to me, I have my own business. I don't want to pay a bunch of taxes. If I would be a millionaire if I had a penny every time I've heard that. And I usually ask, my next question is, okay, what are you trying to do? If you write off your expenses, which I know are all of them, you have more than enough expenses to write off. Are you trying to buy a house next year? Are you trying to expand your business? Let's talk about personally, and then we'll get into the numbers. So with the bookkeeper, it's very easy when I have that. That's the foundation that we can look at and say, okay, so based on what we have here, you're in position to do X, Y, Z. So we have the 10 basic steps for bookkeepers. Number one, an accounting software. I'm not partial to any software, but something. They have a free one on the iOS and Galaxy. I think it's called Wave app. It's free. It will capture expenses. My personal favorite is QuickBooks. They have an online, a desktop version. Whatever it is, just have an accounting software, and generally that accounting software can link directly to your business account. So I'm saying it's mandatory. You need a separate business account, not a personal account that's designated to the business. It has to be a separate business account in the business name. And you can link that right into the accounting software. It uploads all the information. All you're responsible for is classifying it to the proper accounts. Reconciling your checking account. Again, this could be your bookkeeper, your admin, you, if you have the time, where you can track your sales and deposit all sales. The one thing I will say as a business owner, for a bookkeeper, this would be a $15, at most, $15 an hour job, maybe 20. And what I would ask a business owner, how much is your expertise worth per hour? So if you would go into a job today or tomorrow, and you would ask for $100 an hour, because as a CEO, or as you being the boss, you have a higher hourly rate. Do you really want to use this time where you can outsource this to someone for $15 an hour, or if it's a couple $100 per month? Next, we write in business check for all your business expenses. This is a sensitive item because I do have some people that are sole proprietors, and they may use their business account for personal expenses. I know the banks, they really don't want to hear that. As an accountant, we can get creative, and we know how to reclassify it. It's not the best situation. I'm not encouraging it at all. Because really, I don't want to see where you go to the casino in your business account. It's all about perception. And if you give the perception that if a bank is lending you money and they are asking for your bank statements, is that the perception you want to give? Obtain a separate business credit card, pay your business expenses first, and you generate a profit and loss statement. And this is the last one, is a key, pay yourself. So this one, depending on what type of entity you are, it could be an owner's draw, you could be a W-2, whatever it is, make sure you're not working, you wouldn't work for anybody else for free. Don't work for yourself for free. Okay, so we spoke briefly on our financial management software. That was our QuickBooks and Wave apps. It creates beautiful reports. And then this last one I thought was interesting. This is, do not use paper to run your business. Use your software to stay on top. So even with the paper, and I still get boxes full of receipts. Now, a lot of these softwares, you have a receipt and you can take a picture of it right on your phone and upload it, and it will link directly into whatever the expense is. Technology has really made it easier. So now we get into the nitty-gritty of our financial statements. We have three main ones. Generally, the banks would ask for your balance sheet, your cash flow statement, and your P&L, your profit and loss. So I do have a workbook, and I can send it out after the presentation. I apologize, I wasn't able to get it to before. I like hands-on type of work. So this is a snapshot of a balance sheet. And I'm gonna tell you, a balance sheet essentially represents your assets on one side. That's actually what you have. And then your liabilities, that's what you owe out to other people. And that owner's equity is what you own. That's what's left over. And that's a critical piece there, that what you own. So some people want to say, oh, well, I have $1 million in assets, but you owe 900,000 in debt. That 100,000 is the difference. So that we're not counting that the gross assets. However, the reason why it's called the balance sheet is because you see at the bottom, they must balance. And I just want to give you if you can see this, a quick snapshot of some of the key things that I hone in on. Say, for instance, you have a banker and you say, well, you know what? I have QuickBooks. I don't need an accountant to, I can save money. I can just give them my financial statements. And I get this a lot from clients where they have given the banker their financials that have been produced out of QuickBooks or whatever their financial management tool is, and they weren't reconciled. So I wanted to give you some tips on what to look for to make sure before you give out your financials that they're already in compliance. But I do recommend that you have an accountant review them before you send them out. So again, I said your assets and your liabilities and owner's equity, they must balance. You see those two numbers must equal. And let's start up at the top. You see our cash. Now, sometimes it may be a rough month, and that may be a negative number. We don't want to show a negative number. We don't want to give out a balance sheet with negative cash because it's already showing we're in the hole. Once we come down, and you see we have fixed assets. That's the land, building, and machinery, and any type of office equipment. And we coming down here to the liabilities. This is the other critical piece of what I'm looking for outside of the cash. Are you overextended as a business? Do you not have any cash, but you have more debt? Meaning that it is, so as we see our current portion of the debt, it looks like it just must be a long-term debt that they're paying. And the current portion represents the next year's worth of payments. And long-term is the year thereafter. So it looks like they have a loan out on some type of building. That's about 65,000. But as you see, our total debt is 100,000, and our total fixed assets are 92,000. So already we are in the negative. We don't, if we had to just compare our liabilities to our fixed assets, we're not in the positive. And that's okay, because we do have cash and we have some inventory to overcompensate. Wait a minute, I want to go over one more thing. And then the last part is if we come down in our owner's equities toward the bottom, common stock, this is for a corporation or S Corp where they're issuing out stock. Normally that's not for our smaller businesses. And that stock represents other people having ownership in your business. So generally we would have whoever the owners is, it may be one or two owners, and that is your owner's equity. Instead of common stock, it would be your equity there in the business. And I just want you to know that your equity represents, it's a cumulative accumulation of your net profits and losses throughout the years. It goes into that equity section. So also keep in mind, if you continuously showing a loss, that's going to be a lower number. So I just want you, certain things I just want you to think about. All right, so now we're going into your cash flow statement. The cash flow is what it is. They want to see the money coming in and the money going out. This is critical. So you think about if someone asks you to lend you $100, what's the first question you're going to ask? When am I going to get my money back? So that's the same things the banks are asking. When are we going to get our money back? And show me how I'm going to get my money back. And let me see how you've been managing money before. See, when we lend money to family or friends, we have that prior experience and knowledge on how they pay other people back. So that helps you determine if you're going to lend that friend or family member money. The banks are trying to use it based on your past behavior. So that's why they look at your cash flow statement. Again, it's money coming in and coming out, and looking at future cash flow over a specific time. Generally, you'll do a cash flow for the next 12 months. So if we're starting now or till your year end, if you're on a fiscal or calendar year. So right now we're in September. With my businesses, we're doing a cash flow to the end of December if they're on a calendar year. How much cash in and cash out. And there it's critical because usually in the restaurant industry, you have peaks and valleys. Maybe the summers may be better for certain restaurants. And that's when you're going to have to put a little money in reserve. And it dips down when school is back in session, depending on where you're located. So the cash flow kind of gives you that picture of where your peaks and valleys are and how do you plan for it and anticipate it. And with our projection, this is, and again, this is something probably my business owners are already doing. It's just now we formalizing it and putting it on paper, and you sharing that knowledge with your accountant and your banker. So you setting your sales and expense goals. So for instance, maybe with this Thanksgiving, you're going to run this promotion for Thanksgiving, and you're anticipating to double sales for the month of Thanksgiving because you know it dips down after Christmas. So it's just anticipate, and you may adjust your salary. You may adjust how many people you have on payroll or have working during that time. You may adjust your inventory. You know that you don't have to carry as much fresh produce during this time because sales aren't as high, or maybe it's a different type of sale. Your break-even point. How many items do you have to sell until you cover all your expenses? So that's your baseline. And then anything you sell over that, that's profit. And that's what you're in the business for, to make a profit. This is where we plan equipment purchases and replacements, your expansion. You may need, my stove is holding on for dear life now, but it's still working. And maybe I'll wait until after in 3 more months, I know I'll have an increase in catering sales. So that's when I will invest to expand, to purchase new equipment. And the same thing with your inventory and accounting for the seasonal cycles. So here we talk about a part of our cash flow projection is liquidity. Tracking liquidity, how fast can is your money available? So for instance, if you may have a contract, a government contract, how long, what is that sales cycle? How long does it take you to receive that dollar from the time you render services to the time you get paid? And so some places, you know, it's going to be a 30-day cycle. Some agencies, it may be 60, 90 days, and you hope not longer. But a part of business is preparing for that. But as a business, I kind of use this line, you hope for the best, but you have to prepare for the worst. And unfortunately, and sometimes you got to prepare for the worst of the worst. And COVID has shown us this. Who knew that you may have to shut down for 3 months? And it also helps you determine what you need financing, and it shows your lenders that you have the ability to plan and repay your obligations. And here's a sample of our cash flow. Without getting in too deep, we see that the first section is our sources of cash. Cash sales, collections on accounts receivable, interest income, any equity contributions, you as the owner, you contributed money back into your business. Operating uses of cash. That's when you're paying your expenses, your labor, payroll taxes, rent, insurance, all of your ongoing operating costs. And then at the bottom are your non-operating costs. This is where we look at your taxes, your drawings, or how much you paid yourself, your inventory purchases, equip purchases, and any type of debt. And so here we look at how do you increase cash flow. Again, it's basic. You sell more items, increase your prices, reduce your expenses, change the timing of expenses. Sometimes you can call and have credit, or your trade lines, you can adjust and say, you know what, instead of paying a net 10, I would like to pay 30 days out. And you never know. And then making sure that you have sufficient money to start up. And that's not always the case. So of course, it's obtaining money from lines of credit. Excuse me one sec. When you pay yourself, making sure you pay yourself when the business can afford it. Looking at how to buy inventory, negotiating any type of pricing and terms, obtaining credit from vendors. So, and I know as business owners, you know all the tricks of the trade, but this is kind of a refresher that sometimes, as Lindsay said, you have to step back out of your business and look at it and say, okay, what are ways that I can save money? Okay, so this is our most popular statement, our profit and loss, and generally what everyone wants to see first. So this one is your income less your expenses for a period of time. So with a profit and loss, it does an annual reset. At the beginning of your each year, you starting with a clean slate. Unlike your other statements, the balance sheet, that's an ongoing, that's a cumulative accumulation since you've been in business, and it continues to balance on. So with our profit and loss, it tracks our profitability. How much money are you netting after all of your expenses? And are you making a profit? And if you're not making a profit this year, when do you anticipate making a profit? It shows how successfully buying and selling process has been managed, measures your ability to grow your business and reduce your debt and support yourself. So it's a huge report. It shows, it's the meat and potatoes of your business. That can tell, it's telling your story. So I'm a numbers person. If generally when I meet clients, while they're telling me about their business, I want to see their P&L, because in the way my brain works, I'm putting numbers to their story. And if I can't find the numbers, I'm like, wait a minute. You said that this happened, but I don't see this in your books. And generally that's when I can see where someone has said, oh, I paid for that outside of my books because of XYZ. So the profit and loss is critical. And this is the basic formula. You take your sales, the amount of income, you less your cost of goods sold. So that's, if you're selling the plates, how much does it cost each plate that you sell? Whether it's a salmon dinner or a chicken sandwich, you should have, how much does it cost you to produce that plate of food? And that's going to be your gross profit. So for instance, if you sell a salmon dinner for $20, it costs you $9 to make, then your gross profit is going to be $11 per salmon dinner you sell. And then we include your overhead. That's our rent, our insurance, your staffs, and all of your other miscellaneous business expenses. And here we come to your net profit. So on our P&L, the net profit is for our sole proprietors or our single member LLCs, that's your owner's draw. So regardless if you take this money or not, that net profit is carrying on to your tax return. So that means you're responsible for self-employment tax on that net profit at the end of the tax year if you have not made estimated tax payments throughout the year. Now, for my people that are in partnerships, it's the same thing, except for just being on one tax return is split based on whatever your operating agreement is split amongst the partners. But again, that net profit or loss, it carries on to your personal return at the end of tax year. It can be reinvested for future expansion, equipment, principal, loan repayment, and income taxes. This is where I would say before the end of the year, it's good to talk to your accountant to see, okay, what can I do? I'm not looking to expand my business right now, but I want to do something in the future, so I don't want to necessarily pay taxes on all of this money. There are strategic ways that you can reduce your taxable base and it not affect your spending power. So say, for instance, if you invest in a piece of equipment, that depreciation that we write off, that's not a direct cost expense. So that can be adjusted. It may be investing in your retirement account where you can get a retirement credit. It's still money that's coming to you. It may not be available right now. So there is strategic ways. You may be paying your children that would be on payroll. So it's just ways that you can just speak to your accountant and say, you tell them your plan and your goal, and y'all work together along with your banker to see, okay, what's our best way to accomplish it? So is compiling profit and loss is easy breezy with that accounting software. With QuickBooks, it's the press of the button, the Wave app. I'm maybe aging myself. They used to have Peachtree. I don't even know what else is out there, but it's just easy. Some clients I know started off with Excel and they would just enter their information in Excel. The problem, and I used to encourage it, But now the problem I'm seeing is a lot of clients, you outgrow Excel so quickly, and this is the first place you forget to address. So if you're over $100,000 in business and you still operating out of Excel, it is real easy to miscalculate or miss some information. And that's a lot of extra stress. Why not have it linked to your accounting software? It automatically dumps, as opposed to you trying to remember, oh shoot, did I put that expense in there? You have enough stress trying to grow your business and make money and manage it. So here, we're going to look at a sample. When you look at a profit and loss, what I see on it is it may be so different than what you see. So for me, I don't intimately know your business. I'm just on a snapshot. And the funny thing is, with me being the numbers, every P&L is different. I couldn't remember whose P&L I looked at last week. It's because to me, it's a separate story. I can't carry over. It could be two restaurants y'all operate side by side, but y'all each have a different story. Your P&L is going to look completely different. So it's no need of me trying to compare this one to that one. We use it as a base, as an overall industry standard. However, you're telling your story through your profit and loss. But I can see is your business well managed. I had a restaurant that I looked at the profit and loss, and I saw that their salaries were 50% of income. And I was like, you have a lot of people on staff. Are they just standing around? I had not stepped foot in his restaurant. And he was like, yeah, how'd you know? I said, because I could see your salaries are high. It's no room for profit. And that's before cost of goods sold. And so that was the problem that stood out with them. And potential growth. How do you grow? What do you have to do to grow? Are you prepared for growth? If someone said, hey, we can increase your business we can double it. Are you really prepared for double the business? And will it support you as the owner? And ultimately, would you be able to get a loan so you can expand your business? So let's look at some of the business financing. Equity financing versus debt financing. So before we were looking at our balance sheet and we saw that equity section. So equity, that means somebody is financing for ownership into your business. So it all depends. Debt financing is straight debt. That shows up as a liability. And it really depends on what your goals are, where you see yourself. But I will, and this is just my personal opinion, before you give away, think about before you give away equity in your business, think about what you're getting in return, and is it worth it? Financing working capital versus our financing fixed assets. So this is where you say you're using money to help with payroll, help with your operating expenses, versus using money to actually purchase equipment. And it's usually a direct loan on that equipment. So here are some of the do's and don'ts for small business financing. Invest your own money. You never know as a small business. I mean, COVID has taught us so many lessons. This is the lesson now. You are, to get started in your business, you're going to have to invest to a certain degree. However, when you are lendable, that's when you run out and you want to leverage other folks' money as fast as possible, especially when you know you have the revenues to support it. Because COVID has shown us, you never know. Tomorrow's business is not promised. So you have to be prepared. Earn the right to borrow. You got to get your books in order. And just because of where you are now does not indicative to say that you cannot. I think that's the beauty of the relationship with the banker and the beauty of the relationship with the accountant. I can't tell you how many clients I've met, and it's like, wow, remember when you first came to me, you were out of bankruptcy, you just had a divorce, and this, that, and the other. Nobody would even give you a loan for a 5-cent candy. And look at you now, you at 750 credit score. When you know people's journey, or you know that, okay, I know this person, a good one, they fell on some luck because they got ill for 3 months and they had to shut down their business, but I know it's not going to take long for them to recover. That's where that relationship is critical. And for my clients that I know intimately, that I've had for years, when they are down and they say, you know what, I can't pay right now. Don't worry about payment. Let's get you right. However, if it's a new client, I only see you once every 2 years. I'm like, yeah, call me when you can pay. Let me know. And that's be very transparent. And I'm sure it's the same in your business. You're showing profitability. Ultimately, you're in business to make money, period. So if you're in business for anything else, then it's not business. So you want to show that profit, and you're working to make a profit. So you work to pay yourself. And you understand and keep that working capital. You never know when an expansion opportunity is coming your way. You want to be prepared. They say be lean on fixed assets. And I would say that one I would challenge a little bit. You have to look at the fixed assets as that's going to generate revenue. So before you purchase a fixed asset, you got to look at, what is my return on this asset? So now purchasing, I don't even know, a fancy car, a Lamborghini as a business write-off, or my son was just, Maserati. I don't know how much money you're going to make off of that Maserati. I'm not saying that you don't deserve it and you shouldn't buy it, because it is a write-off. However, at the time, if you're not I look at it, if you're not generating revenue, to me, what's sexier than a Maserati is somebody going out and buying a $100,000 dump truck, and they know they can make 10 times the amount of money on that. That's sexy. And then we match the sources with the uses of funds. All right. So just understanding, I hope you understand your financials. So like I said before, you understand what that balance sheet looks like, your cash flow, and your profit and loss. And just know that you cannot prepare those in a silo. You can't say, oh, I'm just going to prepare this P&L and forget the balance sheet. Whoever's preparing it has to prepare it together, because they all link together. They have information that carries throughout all of the financial statements. So sometimes clients will give out one and they haven't reconciled their balance sheet. So it's not going to match up. And that's going to be a red flag for your lender. So you understand your collateral options. That's meaning with your fixed assets, or if you want to use personal collateral, and understand and hold that risk, the cost of loan types. That's with your trusted bank advisor. Looking at grants, usually our small businesses that are for profit, it's not really many grants available. This has probably been the time that we have seen some grants available for for-profit organizations, so we may have to adjust that. And they say shop around and get expert advice. I think the main thing is with someone that you trust, because even shopping around, that involves, sometimes that could be pulling credit, and it's almost dating. Somebody can promise you the world until they get to know you. And it's the same thing with a banker. You don't want everybody pulling your credit. So as Ms. Lindsay said, getting ready for a loan, that business plan, that's critical. And it has to be a profit plan in there. And now I want you to think this business plan you created today and you put it on a shelf. This is a working document. It updates. Like for many businesses during this COVID time, you may have to update this because you had to shift or pivot your business into a different direction. Maybe you had to expand your online sales and really invest in your online marketing. So this, just keep in mind, this is a working document. So you make sure you keep it up to date. Know what you can afford. Make sure and you see these financial statements are all throughout this presentation because you have to, they're a critical part of your business. Check your credit report, looking at collateral options, showing your equity contribution. That's what you invested in the business to show you have some skin in the game, and research your financing options. So, and here's the loan package where I told you a lot of clients come to me. It's usually to put together a loan package. So with the business plan, that includes the business financial statements, your personal financial statements, and then your personal and business taxes. And more elements of the loan package, your source and the amount of equity contribution, credit report, collateral, your purchase agreements. That's Lindsay's the expert in all of this. And then qualifying for that loan, of course, is the credit score, your equity contribution, looking, are you able to repay it back? So this is getting into the nitty gritty of the banks, but I'm gonna tell you the accounting side of it. This is what you should already know the answers to this question before you apply to this loan. You should be prepared to say, even if your year-to-date financial may show a modest loss or a small profit, you should be able to address to say, you know what, I know it shows that I had a small profit. It was due X, Y, Z, but this is how I intend on making a profit, or paying this loan back, or whatever it is. So this is where we were talking about the financing options. So I'm gonna breeze through this for a startup business. Of course, equity in the business, sweat equity, you working for it, business credit card, and family. And looking for a loan, we spoke about this. And I just wanted to sum up, reinforce some of the key points. I know I threw a lot at you on a Thursday evening, and accounting is not your favorite topic. However, if I wanted to, my key elements, the budget, get that budget. Even if you have an accountant friend, a trusted someone that you knew, just tell them, hey, look, can I just have a half an hour of your time? I want to run something past you. You don't have to put it in any pretty presentation. You start writing down, how much do I anticipate making? Just start for 2021. How much do I anticipate making next year? And based on what I spent and how I look this year, how is that going to look differently in next year? Right now is the time to budget for 2021. We're almost done with 2020. Bookkeeper. You have to have a trusted bookkeeper. If you don't have one, find one. My information's at the end. I'll be happy to give you a couple referrals for bookkeepers. This is critical because at no point, you as the business owner, it's almost if you are a parent and someone say, well, do you know where your child is? You have a small child. And you're like, oh, I don't know. That's the equivalent of not knowing what your books. You're not knowing where your business is. And you should know that at all time, and where it's more than up here. Because sometimes when you get bogged down into doing your craft and being the expert and dealing with staffing issues, dealing with this crisis, that crisis, you lose track of some things. So you want to make sure that's taken care of. And then our financial statements, our critical financial statements. This is where you have the accountant also come in, review those financial statements from what the bookkeeper has put in all the information. And the bookkeepers generally do not do financial statements. And they're usually transparent with that. And that's where, but they can produce them, whatever's in the system. And this is where your accountant can go through and make adjustments and do all their accounting stuff in accordance to our generally accepted accounting principles. And you have that balance sheet, the cash flow, and the P&L, and making sure that it flows and ties directly. That is my next critical. If you don't have an accountant, make sure you have them review your financial statements, because that tells your story. That tells your your financial story. Separate the personal and the business. This is your business. How you spend your personal money is your business. So what do? You pay yourself. If you have something that needs to be paid personally, you have the business write yourself a check. And then how you spend it is up to you. Those are my most my takeaways. If nothing else from this presentation, those are my critical takeaways for on the accounting side. That's a summary. Yeah. So with that, this is my contact information. I am happy to address any questions if you have any. Do we have time? Okay, yep, we have time. Yep, address any questions or any comments or thoughts. Let's see. I'm trying to.
All right, thanks so much, Rain. We appreciate it. That was great. I'm going to ask Jennifer to keep an eye on the chat box as well if you see any questions come in. A couple of questions, and I'm going to try to combine a couple for those. And Lindsay, if you can come back as well. I'm going to try to combine these questions into one. And so this is really related to how do you identify a banker and an accountant. So we had a couple of questions come in related to how do you choose a banker and an accountant, I'm going to add to it, that fits your business, and what should you be looking for when it comes to a banker and an accountant so it matches up. That's my interpretation of that.
So I'll hop in a little bit first. I'm sorry, go ahead.
So either one of you can go first. Right?
Okay, perfect. Charmaine, if you don't mind, I'll just hop in really quickly. First, Charmaine, thank you for all of that valuable information. I always appreciate you and my ability to learn from you as well as a value partner. But for me, when you are looking to add those key partners to your business, to your circle, you want to interview them, you want to date them, court them, just like you would anybody else. With your employees, you typically take them through an interview process. While you might not directly interview your banker or your accountant, you still want to do a coffee date or introductory phone call and then proceed to a face-to-face coffee date. You want to spend some time having conversation with them, getting to know them, getting to know what they're about, getting to know what is their overall vision and their mission of why they do the work that they do. Because I'll be honest, everybody isn't out here to really take care of the community. You have some people out here who are about collecting their check, and you got to be able to have a sense of discernment to be able to sift through those people to find the ones that are really here for you. Another great way is to ask about referrals. Talk to your other business owner counterparts. Talk to your external partners that you do currently have relationships with. So let's just say you have an accountant, but you don't have a business banker. You talk to your accountant. Do you have a business banker that you would suggest, that I work with, or that you would refer me to in general? Vice versa. If you have a business banker and you don't have an accountant, ask that business banker for a referral. I promise you, as centers of influence, we have each other within our network. It's really just about identifying what it is that the business owner need, what type of personality do they need to work with, so that we can really and truly make that referral. Typically within the banking industry, you know, they require us to give you at least 3 partners to choose from, and then you kind of take it from there. However, yes, I will provide you with all of those options, but after really digging deep with clients, sometimes I'm able to just tell personality types in whom I think that you might would prefer. And I might just say, hint, hint, this is one of my favorite, or this is who I think you would be the most relatable to. You just have to ask within your network.
Yeah, I agree. I'm a interviewer. It's and it's one of those things. You like, you're right. When you're dating, you have that feeling, that intuition. And there are different types of accounting, like accountants. I particularly I love the small business. So I started off my career with large business, but I choose not to do that. So that's not my space. I wouldn't, and not because I can't. It's just because it's something about, I grew up in Baltimore. It's something about Baltimore that I love. And I think small business and entrepreneurs is the backbone of our economy. So that, I know that's my place. And I love nonprofits. I love mission-driven organizations. However, not everybody, I'm not going to fit everybody's mold. So I agree. It's you get to know and ask around, ask some of your colleagues that you trust or friends to say, who do you use for accountants? And, you know, people are brutally honest, like, you know what, I use them for this, but I may not use them for that.
Thank you both. I do have another question that I'll kind of throw in, and Jennifer, if you have any, feel free to jump in as well. And this might go more towards Lindsay, but, you know, Charmaine, if you you know, want to jump in too as well. And this is about how to find financing for your business, and this is around kind of types of capital or sources of capital. If you can kind of share kind of what those are, and then tips for, you know, connecting and accessing those sources of capital to help, you know, start and operate your business.
So there is literally a variety of types of capital that small business owners can take advantage of. You have grants that are out there. Granted, sometimes they can seem far and few for-profit businesses. However, in the time of a pandemic and in a time where a lot of organizations want to invest in small Black businesses especially, there are a number of grants out there to take advantage of. But of course, you have your traditional lending that is through your financial institution, through your bank or through your credit union, that you can tap into. You also have investment funds. You know, there are investors out there, venture capitalists, angel investors who are looking to plant seeds into budding businesses. You also have, you know, your untraditional methods of funding through your CDFIs. These are your community development financial institutions, where they typically receive their funds, because they're typically nonprofit. They usually receive their funds from large financial institutions to infuse within the community, because a lot of times they have lower credit goals that they're benchmarks rather. So a lot of time for me, when I have clients who can't always get approved traditionally through a bank, I will assess the situation and figure out exactly which direction the client is probably best to go. And I make referrals to my CDFIs. I make referrals to my crowdfunding partners, especially like Kiva on behalf of Baltimore Core. They are absolutely amazing with their 0% interest business loans, especially right now in the middle of a pandemic, where you have the opportunity to have a grace period, you know, for a couple of months, where you're not necessarily paying on that loan, you know, until that grace period is over. So there are a number of types of capital out there for small businesses. But to be honest, you want to have a business banker who's well versed in the community, who has those partnerships that they can plug you in with. All business bankers do not have that access. So I always say, start with the conversation with your business banker and see what partners and connections that they have, because sometimes when you skip over your business banker and you just hop out there by yourself, sometimes you may not have the connections to really get what you need. Two, sometimes you won't have that advocate because you're just out here by yourself. And three, sometimes you're not as prepared versus those clients who come through their business banker. Their business banker understands what it is that that client is looking to do. They understand that financial situation of that business owner, and we're able to assess the situation and make the proper referrals that could really benefit you and your business. Some of my clients are more suited for CDFIs. Some of my clients are more suited for Kiva. Some of my clients are more suited for, investment funding. And some clients are just in a better situation to take advantage of traditional lending tools. So I say start with the conversation with your business banker and see where their connections are that can assist to get you funded. I know for me, not only do I have partnerships in multiple CDFIs as well as with Kiva, but I also actually sit on the Baltimore Loan Committee for a CDFI, which means that my business clients who I can't get approved traditionally over here, hey, it's an easy toss up to the CDFI that I sit on the board for. That means that I am your direct advocate with that organization. I'm bringing your case to them, explaining who you are, what your strengths are, potentially what are the challenges that prevented us from getting traditional funding, and I'm able to plead that case to them on your behalf. So have that conversation with your business banker to see what it is that they can really offer you.
Thank you so much, Lindsay. That is just amazing to hear all those sources of capital out there. Shemaine, anything you want to add to that as well?
I always admire Lindsay, but what I will say is that's a prime resource right there. I mean, that's gold mine right there. She's saying, and I've worked with a lot of different banks. Okay, Lindsay, I'm gonna toot your horn for a minute, but this is the truth. Usually I hear the no for my client, and that's a traumatic experience, but you don't usually hear bankers come back and say, okay, we're saying no, but here are some other options. That's important. So I just wanted to point that out. That's critical.
Absolutely, especially because a lot of times as a business owner, you're already kind of coming out of this space where it's, oh my God, how do I do this to even ask for the funding? So to break it and to ask and then get denied and not provide additional resources, it is very traumatic, and it will make you and discourage you from liking financial institutions.
Yeah.
Thank you for this wealth of knowledge that you both are sharing. Jennifer, if you have any questions, kind of jump in and feel free to ask them. If you don't have any in the chat box, I know time. So Jennifer, if you don't have a question, I'm going to ask both Lindsay and Shemaine to actually give us some parting words to the folks who are still online and the businesses who kind of came to this workshop. What would be your parting words of advice to them? But Jennifer, any questions before that?
No, there aren't any questions in the chat or the Q&A box. I did have a general question. I don't know who wants to take this on, but during this whole pandemic situation, a lot of the small businesses that we work with, one of their biggest barriers to even getting the PPP loan was the fact that, or even unemployment, was the fact that they couldn't show that they were they had any income, that they were actually getting income from their business. Do you have any tips or suggestions or help around that piece?
I know and I'll just speak with clients that came to me that needed their tax returns done, who were applying for the PPP. I first spoke with the bankers, got their formula, and I would tell the client directly, before we prepare your taxes, based on what you have now, you may not qualify, because this is their qualifier, or it takes your net, if you're a sole proprietor, it takes your net divided by 12 times 2.5, and it's only going to allow you to get XYZ amount of money. So that one for the PPP, and it came out many rounds, and it was some of the businesses, as Lindsay stated before, they were so used to writing off most of their income, and this loan was based on that net, or you had to show proof of payroll. And so a lot of people say, well, I did have payroll, and what is considered payroll to a bank and IRS is a W-2 employee. That means you're paying payroll taxes, having withholdings, and unfortunately, a lot of businesses weren't in that position. Mm-hmm. So what I used it as a learning tool. Okay, so we know this is what they're asking for. And if you're looking to get funded in the future, let's set this up so you won't miss the boat next time. And again, it also, there were other opportunities for funding. SBA came out with the emergency disaster. It's not too late. You never know what you may qualify for. So it's just applying for the right tool that fits your criteria. And now, unfortunately, some businesses did fit it, and they still weren't able to receive money through the PPP because it may have been too late. But I can't think of that saying, but it's one of those, you have to be prepared because you never know when the opportunity is going to come your way. So it's just helping them to be prepared moving forward.
Thank you. So hopefully all of those that are on this call were able to obtain some useful and helpful information. All of the panelists will provide their additional information. I know that in the chat box we have Lindsay's information, and we can add or drop Charmaine's information in here for everyone.
Great. And so I want to go ahead and open it up for parting words of advice. So Lindsay or Charmaine, either one of you can go first. So parting words of advice.
Take your business seriously and invest in yourself and in your business. Investing in yourself and in your business does not always mean that you need to go get a degree in the field. It just means that you need to invest in the proper tools, resources, and people. Frankly, you want to make sure that you have a strong network of people who can support you, who can help you develop your business, because ultimately your network is your net worth, to be honest with you. It doesn't help you to be surrounded by business owners or people who are looking to start businesses who just aren't where you're trying to go, or who can't really help lead and guide you in any form or fashion. You got to invest in yourself. And sometimes that means stepping out of your comfort zone and tapping into a new network of folks. Sometimes that means tapping into new software, a new institution, new supporters to get where you have to go. And sometimes you have to leave people behind. You have to leave old habits behind. And sometimes we got to leave bad business behind. Every business idea isn't going to always be your golden ticket, just to be quite frank with you. I know that when we have businesses, these are our babies. We want to get the absolute most from them, especially because we contribute so much to it. But sometimes we have to also be very realistic with ourselves so that you aren't wasting time, valuable resources, and energy into something that may or may not be as profitable or as long-term as you ideally want it to. Another thing is just do it. I know that there is a lot of work. Trust me, being a business owner is not for the faint at heart, because there's a lot of work. There's a lot of responsibility. However, if you truly invest and if you do the work, you can reap the harvest of your business. And think about business. We have to stop thinking about business as just a short-term thing. This is what I want to do right now to make some extra money. No, when you're in business for real, we need you to think and take your business seriously, because the community depends on you. The community who needs to be employed, they're looking at small businesses to be their future employer. prepare your business to really be a pillar within the community to bring income to our economy, into our communities. Let's make the change together. However, it really does start with the business owner, and how much are you willing to put into that business? Are you willing to separate what you might think would be an expensive hobby for a business?
Yeah.
Thank you, Linda and Charmaine.
Yes. Yes, you said that very eloquently. And I would say, just to carry on with it, this is probably the biggest investment that you're making. So you want to make sure you're doing it with integrity, and you're doing it correctly. Because when you know better, you do better. And if you are saying you're looking to grow $1 million business, are you doing $1 million actions? And that, I think that's where you're trying to grow, you have to operate as if you're there today. And that's how you grow and get it done. So if you are used to you're doing everything, the HR, the this, the that, when are you having time to really grow your business? When are you able to step back and say, this is what, because anything can be outsourced. Anything, you can hire someone else to do it. But it's you having the expertise on knowing how to manage it, direct it, to have it grow into a thriving business. So I would, I reinforce that statement. Yeah. Continue to invest in yourself and in your business.
Well, thank you both so much. We want to just express our gratitude to our two speakers tonight. They did a wonderful job. And we also want to encourage all of you to visit francis.com to find out all information about the project, and also to find the application to apply to be a vendor in Lexington Market. We will be sending out information from this workshop, and we will also be posting a recording of it online on transformlexington.com. I also want to thank Baltimore Core and Jennifer Clark for being here as well, and for all the work that they do. So once again, Lindsay and Charmaine, thank you so much for your information and spending the time with us tonight, and thanks to our participants. Have a good night, everyone.
Thank you.
Thank you so much, everyone.